Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here as the Chief Executive Officer of Treasury Consulting LLP. And today we are going to speak about a topic which is CHF. In fact, today we are going to covering about the technical analysis of the CHF. CHF stands for Swiss franc. And in this technical analysis, we would be covering using momentum investing. So as you very well understand, that a lot of volatility which is happening in the markets, and in fact amidst this volatility there is a good news that Japanese there is a good news that GBP is maintaining a level of 1.22, which is a very good news for me, at least, which I perceive, because at least GBP is not falling. Had GBP went to 1.17, which we predicted, and we also mentioned that the next few trading days would be very important for GBP, it would be a chaos in the market and people would have started selling, and this way I think dollar strength should have moved up. Of course, dollar strength is going up now also. If you look at DXY, which is dollar index, it is trading approximately 97.98, and hope you recall our technical analysis video. We already mentioned that dollar index would move to 99, and from where the Federal Reserve need to take a call whether he would like this to move to 100 or he is not interested in moving this to 100. But this is something which is round the corner, and we perceive that the dollar strength will move to, dollar index will move to 99 as early as possible. But in that, few allies are moving very good, and we would like to cover this with a news that has been in the market. Of course, we would like to cover there is a separate video which is coming today which would be covering that. So what is this news is that, yesterday there was a news in the Bloomberg TV. You have a chart right in front of you, but yesterday there was a news in the Bloomberg TV which clearly suggested that the big central banks, the assets of the big central banks jumped to $21 trillion in the last 5 years. So the 10 largest lenders now own asset totaling $21.4 trillion, an increase of 10% from the last year. The data has been compiled by the Bloomberg. The combined holdings grew by 3%. So things are going very, very messy. There is an, as per the chart which has been given by on that, the source is the Bloomberg, that October 2006, the combined entity of these 10 lenders, the 10 largest central bank, was approximately $6 trillion, and today this is roughly $21.4 trillion. It means on YTD basis they are growing at the rate 10 point, or not on YTD basis, yes, on YTD basis they are growing by 10.4%. Now there is a reason to worry about this. Of course, there are a lot of people who are still believing that quantitative easing would continue and central banks is having no choice over the quantitative easing. They tend to fear that if quantitative easing would start, then the world will continue to be in the recession. But a lot of big economists, in fact, all those who are quantitative thinkers, they stressed the need of not to have a quantitative easing, because as per them, if the quantitative easing would continue, then things would be haywire for the world. So what they said here is that all the American allies, which is Canadian dollar, which is Japanese yen, we should not forget that Japanese yen is having debt to GDP ratio of approximately 380%, but it is still an American ally. So if the dollar will gain strength, so should be the Japanese yen, and this is what something which is happening. Today, Japanese yen is trading at 104 point something, which is a very big number. Because few weeks ago, everybody did projected that Japanese yen will move to 98. Like when Kuroda given a statement that he's interested in having more quantitative easing. So that way, there was a big probability that Japanese yen could have moved to 98, but it went to 104. So all the sellers stop loss has already been breached, and I hope they must have they must have cancelled their trades and put the losses in their books. Now in this video, CHF is also an American ally. We should not forget that CHF is an American ally, Swiss franc. Now Swiss franc highest was approximately 1.04, and Swiss franc is also maintaining a parity with the euro. But that is a very good news that euro is not falling. Sitting today, euro is not falling. If you look at this chart, which is right up front to you, you will get to know few ticks in red and few ticks in blue. Now, what are these ticks? These ticks are nothing but momentum strategy. Now, what do you mean by momentum strategy? A momentum strategy is a strategy that aims to capitalize the continuous of the existing trends in the market. So if the trend is going up, you will buy. If the trend is going down, you will sell. In a momentum strategy, if there is an upward position, then people will buy. And in a momentum strategy, if there is a downward position, people will sell. But at the same time, we should not forget that in a momentum strategy, the people should understand that sometimes a particular stock, currency and anything is not in buy and not in sell range. Now take a simple example of Wells Fargo. I don't think that's, even after a lot of scandal that has happened and the CEO of the Wells Fargo stepped down and they are facing a big penalty. From Federal Reserve. I seriously don't think that time has come when they have to. I seriously don't think that time has come when there is a selling call in the Wells Fargo nowadays, because it is still the second most capitalized bank in the globe after JP Morgan. It was number one, but then it reduced to number two when this scam happened and the CEO of the company went before Senate to explain that. Now seriously, considering the same, if now the same is the case with the momentum investing. Unfortunately, people tend to believe that if the things are going up, you should buy. If the things are going down, you should sell. No, you should believe that if things are going up, then you should say that you should see the reason behind that. Now take a simple example here. The chart which is right up front you, this is a 1 year chart. Now in this chart here, the CHF was 0.94. And I know that, dude, and I still remember last year when dollar gained a lot of strength and a lot of talks were happening about the possibility that the Federal Reserve would increase the interest rate from 0.94. It went to here 1.02, and here is the great sell-off that happened in Swiss National Swiss franc, and especially at the time when the Swiss National Bank decided to go ahead with the negative rate. In fact, last week in the International Monetary Fund conference, Swiss Bank clearly said that Swiss Bank President Thomas Jordan said that if there is a requirement to capitalize the economy by reducing interest rate further into negative territory, they are ready for that. As simple as that. Now, if you see these red signals here, 1, 2, 3, these red signals indicate the selling positions. Now, this is the one selling position. This is one selling, this is your one selling, this is your one selling, this is your one selling, this is one selling. On the other hand, these blue indicate the white selling, the buying. The buying. Now what we do, we need to understand that momentum strategy could be false, momentum strategy could be I would say it could be fake also. Sometimes it is fake. Now what we need to do before going ahead to decide whether the particular thing is moving up, so you should buy, or whether the particular thing is moving down, so we should sell. Let's compare this momentum strategy which we have right in front of us with Bollinger Bands, and let us see whether this momentum strategy fits in Bollinger Bands or not. We will continue to do plus minus 2 standard deviation in the Bollinger Band. So we will continue with plus minus 2 standard deviation. Now if you look at this, then you will get to know that Bollinger Bands, that there is a medium average you have, and then you have a upper line, then you have the lower line. In the upper line you have plus 1 standard deviation. In the lower line you have minus 1 standard deviation. Now if you carefully see here, then you will get to know that wherever you have buys and sell, the area of the Bollinger Bands is growing exponentially. Now here you have a selling call. Now look at the width here. Now here you have the selling call. Now look at the width here. Here you have the selling call. Look at the width here. Here you have the selling call. Look at the width here. But now look at where we are. Currently, CHF is trading roughly 0.9840 approximately. and I think yesterday or day before yesterday trading session, Swiss franc touched 0.99 something, from where it was a resistance. Little sell-off happened, and of course GBP is also concerned because of because the Brexit has not yet decided completely what would happen with the Brexit, what would not happen. But as far as the news is concerned, that London property prices are cooling off, and people have already decided. London property prices are cooling off, and people have already banks have already decided that by 2000 end of 2017 they love to quit UK, because this is no more a financial center. And if this would happen, then business will surely move to Singapore. So in that regards, GBP would fall, and if GBP would fall, it is a direct gain for American dollar, as simple as that. Because America currently, US dollar is having three competitors: your GBP, your euro, and your Chinese yuan. Chinese yuan is going strong, no doubt, but it is facing little problem. They're trying to recapitulate their economy and all, and they're trying to give their financial system a fresh lift, but certainly this will take some time. So considering all this, if we look at here where CHF is trading right now, which is currently which is trading right now, which is 0.9840, then you would get to know that this particular direction is having a little wide opening, like little wide, like this. This is little wide, and in that regards, there is a big probability that in upcoming time you might see that Swiss franc, because of the dollar strength, would move to approximately 1. I'm not saying 1, I'm saying approximately 1, which could be 0.9950, 0.9960, like this. From where we need to see the sell-off, then how people doing the sell-off, or whether people would continue continue with this, or they want to increase it to 1. Because if this would increase to 1, then of course this would be good for exporters, especially those who have receivable in dollars. And if it goes greater than 1, this is bad for exporters, because this is bad for importers, those who are importing in dollars. So this was all about today, and before winding up, we would like to summarize the fact that momentum strategy is a good game. If you are using the technical analysis of doing momentum strategy, then you are most welcome to connect with us. But at the same time, before investing your trade, before doing on momentum strategy, you need to understand two facts. Number one, you should have a strict stop loss positions in place, and number two, you should know that at what rate you would wind up if the things would backfire. Because one thing which we certainly need to understand while doing trades using momentum strategy is that false signal or fake signals are quite possible. It's not the fault of the momentum strategy. It is something which we need to understand, that sitting today markets are more of an emotional than a fundamental, and being they are emotional in nature, it is a clear cut. If somebody say anything, whether it is a fundamentally true or not, things would move. So this was about today, technical analysis of Swiss franc using momentum strategy. You are always welcome to connect with us at rahul.magan@treasuryconsulting.in, and our alternate email ID is info@treasuryconsulting.in. Visit to see our website www.treasuryconsulting.in. Hope to you soon, and have a good luck ahead.